today I'm going to show you the best swing trading strategy that you can use to make thousands of pounds from the markets every month. Now let's first dive into what is a swing strategy. So a swing trading strategy is where you trade on longer term positions, so positions that you would have open from maybe the start of the month and then you close at the end of the month, or a position that you hold open for an extended period of months. So they can be super long trades that you have open. Usually what you'll find though is actually swing trading has a higher hit rate. So in terms of wins, you have more wins with a swing trading strategy due to the fact that it is a lot easier to predict the markets when you know where they're going on the higher time frame. So what we're going to start off by is we're going to be looking at euro dollar. I'm going to use a few pairs for this example in this video, and then you'll see what we're going to put together. So we're starting on the yearly time frame. This is obviously a higher time frame than what most people are used to, but it gives us a good perspective of where the price is going. And you can use very simple stuff such as support and resistance. You can see a level of support flips, then resistance down, but I like to use fair value gaps and then previous highs and lows. So that's what I'm going to be doing. As you can see, we've got a mitigated swing low here and also a mitigated yearly fair value gap. So what we're going to do, go on to the monthly chart, and now this breaks it down, and now price is a bit easier to read from this point going forward. As you can see, this is during 2017, 2018. We pushed up right into this yearly fair value gap. You can see we push up, we reject at the 50% of this yearly fair value gap, and then we come back down, and you can see we retrace approximately 80% of the move that we had going up, and then you can see we push up again before finally hitting this long-term target. Now there's multiple ways you can trade this, and what I would want you to use this video as is a video to form ideas on how you can swing trade and what you can look at when swing trading. So very simply, the first one is you could set an entry at the 50% of this yearly fair value gap and just target the low. Simple as that. And you see there, that's a 1 to 4.3. It took a long time, took 4 years, but that is one trade you can take. What I would prefer that you do is you can either take a shorter term position once we see that we start rejecting, and we set a tighter stop loss, and you can just aim for a 1 to 2, and you can see that closes out in a few months. Or what I would suggest that you do is, if we are to look back at time and we go into now the weekly time frame, what can we see happening? And this is where you can really form your shorter term swing ideas, because it's a lot easier to read price. So as you can see on the weekly time frame, we push up into the yearly fair value gap and we form a swing high. Now this swing high, due to us being on a lower time frame, we want to see swept so that we have liquidity in the market. As you can see, price comes back up, makes a new high and rejects, and then we want to see a bearish move. And as you can see, we have a bearish candle close here, so we can literally just take an entry off of this, and then we want to target our lowest swing low that's unmitigated. You can see it is unmitigated, and this is the lowest one because this was what was previously mitigated, and all of these unmitigated. So this is why this is our swing low that we want to target. As you can see, that's a 1 to 2.8, so almost a 1 to 3, and that you would have held through for a few months time. But you can see how clean price moves down to our target due to us using this higher time frame area of interest. And this again provides us with another entry. You see how we have another swing high, we get a rejection where it's swept, and then we get a bearish expansion. And once again, same thing. You can set your trade here. You have your low targets there for 1 to 7, or you can take profit 1 here, take profit 2 here, and take profit 3 here. And as you can see, it turns into quite a nice trade idea. And likewise with this, you could have take profit 1 there, take profit 2 here, and then take profit 3 there. Now you would also, if you wanted to, still have this position open going for the final target, because as you can see, this is a protected high. It does not get swept once again. And you could also use this here as your target for your final take profit on here. And as you can see, that's a 1 to 7 and a 1 to 6. Now, obviously this is over the course of a few years, but you've got to think of it on a longer term perspective in terms of a portfolio gain. If you're on a personal account here and you've got a nice pot of money and you can enter this trade with decent size, I'm talking upwards of £10,000 minimum, then you're going to be returning around a 15x on these trades here, because this trade would net you £75,000 and this trade here would net you £63,000. And you've got to think of it in the scalability. So for example, if you were sitting in the position where you had £1 million in trading capital, which is where I think a lot of people aspire to be, and you were to put in 100 grand into this position, you're walking away with 750 grand profit and 630 grand profit. And you can see there how you've gone from having $1 million in your account to just over 2.5 million. And to think that that only took a few years is crazy, right? It's all about putting it into perspective and understanding. And I'm not saying that you need £1 million in your bank. A lot of people watching this will not have that, but you can work up to $1 million in funding with prop firms. And then that would allow you to not necessarily over risk. You would probably be limited to your risk, around probably 40, 50,000 would be the most you could put on. However, that's still a hefty amount, and that payout would be very, very nice when it arrives. So just think of it like that. This is for people who, work a full-time job or have another business that they run on the side where they devote all their time to, and they have maybe 20, 30 minutes to look at the markets every day, and, or an hour a week or so, and you can set this trade up. One thing I would warn you though is just be careful of swaps and your commissions, because swaps is going to be a killer over time. But as long as you're working it in profit, should be very nice. Considering both of these are short positions, actually you will be making a lot of money from swaps as well, so it's a win-win. Now what I'm going to do, I'm going to give you one more example. We'll have a look and see if there's something on USD JPY, which it looks like there is, and then I will leave you to go and test this in the markets yourself. As you can see, what we have is we tap in. However, this time you see we don't get a sweep with this swing low, so we want to look for other entry confirmations, and my eye immediately goes to this inverse fair value gap. You see how we break right through it, this weekly inverse fair value gap, come back down, this low is protected, and then we start pushing up. So you can set your trades such as this, and then once again you have your take profit 1 here, take profit 2, and then take profit 3 at the top for a 1 to 4. We'll see if it gets there. It might not. I don't think it will be getting there, but you can see that we've already would have taken partials along the way and should be a nice profit. So there you are, guys. That is a swing long-term trading strategy for you today. Many members are obviously benefiting inside surge from shorter trading strategies from the traders who are posting out trades every week, and I would highly recommend that you look in there and test the waters before you decide to take the plunge into trading by yourself in the markets. Thank you very much for watching.